I want to share a clip with you from a recent interview by Dr. Ron Paul, a former congressman from Texas, about 20 plus years as a representative in our Congress, as well as author about five or so books, primarily dealing with our current monetary system and how the Fed, for the most part, has drained our nation due to debt. And in this interview here, Miss Amanda Diaz asked him some serious questions, of which I want to just point out a few things that really stood out to me when I first saw this interview. He really emphasized the alarming increase rather in the debt, and how debt is continuing to increase. How the Fed policies are, not working, and a lot of debt is leading to malinvestment, in all the markets globally. To where she kept hinting at some type of event. She mentioned Greece. She mentioned any type of thing in the market. And so Dr. Paul basically said that, you can't predict an event, just like the whole Lehman Brothers crisis for the most part was the initial cause of the 2007, 2008, market downturn, and no one saw it coming. And so he's saying that Austrian School of Economics, which deals with, explaining economics from a different standpoint than the Keynesian model that we're currently operating under, can't predict when, but it can predict that too much debt always causes problems. So real quickly, want to just play this, let you hear it, and love to get your thoughts on it.
What exactly do you see right now on the horizon that is going to bring us to a currency crisis? What's the catalyst, and what can be done to prevent it?
Well, most of the time these things are unforeseen, and most of the time there's a psychological element and a panic. If you have unsoundness and then there's no foundation, it's just held together by confidence. What happens is the confidence is gone. Something might happen in Greece. Who knows what'll happen there? And it may have ripples. Did anybody warn us about 2007, 2008 and Lehman Brothers? Nobody warned us about that. The malinvestment was there. It's all out there, and it's very, very fragile. To be confident that don't sweat it is in denial. There's a system that is very, very fragile, and exactly how it transpires, hard to say, but there's going to be some international economic or geopolitical event. Right now, the price of oil, how many people predicted oil would be down to $50 a year or so ago? And why is Saudi Arabia selling dollars like crazy and selling their assets just to get by? All the petrodollars are, being brought in at a rate actually for some countries faster than they did in '08 and '09. So I would say that people are struggling.
Paul, do you have a sense of when you think this could happen, Dr. Paul? If you don't know exactly what event, do you think this is something that is really imminent? Are we talking in the next year, the next two? If Greece misses the payment, we're all going to see the dollar
in the next few years. Well, the big thing is, the important thing about Austrian economics is they can sense trends. They know what malinvestment is. They know what too much debt is. And they know that corrections always come, which are the corrections from the inflation by the Federal Reserve System. The one thing that they're very precise in about predicting is you can't predict the event, the timing of the event. You know that the corrections have to occur, but you don't know what year or what date it is, because there's a psychological factor. It's the confidence factor. And right now, there's no confidence in investing in this country. There's confidence in the marketplace, but there's no confidence really in investing, in creating new jobs right now. So the confidence factor is something you cannot measure, but you can measure the degree of debt and the degree of malinvestment. And in time, it has always happened that there will be a correction. Right now, the markets have tried to correct things since '08 and '09, but the correction has been prohibited. It's just like in the Depression. We prohibit it. We delay the inevitable. Japan has done the same thing. And right now, we do not have a healthy economy because we do everything to perpetuate debt, increase printed money, increase regulations, and think that they can compensate for all the mistakes of the Federal Reserve.
Increase debt, increase malinvestment, increase this, increase that. Our economy is not healthy. That's just something that you won't really hear from many other people, especially any former congressman or definitely not any current congressman, that our economy is very unhealthy, and it all depends upon, informing people and getting educated and, taking action in any form or fashion that is appropriate for you. Anyway, I'd love to hear your thoughts.